Hello, and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 Pips rocking and rolling, 6th of December 2015. Not making any trade calls or recommendations because you're responsible for the trades you may decide to take. The fact that listening to this means you've read to decide to accept all the disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, again, I hope everybody's having or had an awesome weekend. We're going into an interesting week, which is going to be a bit of a, wait and see week because really it's all about the FOMC following week. But still, we have some interesting data points. I mean, on Monday we do have BOJ on the wires. We've got Cardi speaking, so we've got two more central bankers speaking. On Tuesday, we've got some data out of China and out of Australia with some decent prints out of the UK and Europe too. We also have another Fed's central bank speaker, so Bank of Canada, Paulus is speaking. And then Wednesday, we're going to have some other China data, but it's all about the RBNZ with that rate decision. We're going into Thursday. We got more unemployment claims out of Australia. We got the SMB press conference, so that's going to be interesting. We've got MPC, so the bank rate out of BOE2, so Cardi's going to be on the wires. We got unemployment claims out of the U.S., and then on Friday, we've got, PPIs, core retail sales out of the U.S. So again, there's, it's more China news over the weekend. So clearly, there's going to be a fairly steady flow of data throughout the whole week with a lot of central bankers speaking. Now, I think the question on everybody's mind is, both on euro or on the equities is what's going to happen with the equities. Are we going to get a continuation of the moves we got last week, right? If you look at the ES, so we had that very aggressive move down and then, recouped completely. I mean, if we look at it in another way, in terms of the ES, right, it's still all about those highs. So it still looks like all the dips keep on getting bought. No matter how aggressive the sell-offs are, they just keeps on buying the dip. It keeps on rolling higher. So I think there's been some decent opportunities, both to the long side, both to the short side. We prefer the short side. I mean, clearly here, this is not an area what I would want to be getting aggressively long, but it looks like the market wants to try higher. It looks like the market wants to try and print new highs. And again, we'll have to wait and see if indeed it can take out these highs and get some traction, or if not, expect the moves back down to be just as aggressive as the moves to the upside have been, right? So it's a tricky one. I think it's been catching a lot of people off guard, both the shorts and the longs. But here, it's all about these 2100 short term, right? What's going to happen here? Bulls, bears trying to fight it out, and aggressive move above. You'd have to expect those highs to come calling, and failures. We can't be surprised to see this back into the 1250 very aggressively as it did last week, right? So it's a tricky action. I mean, you have to respect the fact that all these dips keep on getting bought, and they get it bought up hard. So it looks like the market wants to fail from a higher level. I was just still a bit suspicious of the market in general. We'll have to wait and see. I don't think it's the time to start to make some huge bets or huge plays. Time to stay tactical and look at any kind of opportunity, both the long side or the short side, that may arise around these key levels we're focusing on, right? I think that's the most prudent way to look at it. If you're looking at, let's go from left to right. If not, I'm going to forget some chart for sure. So you see here gold, we pressed back down into those 1050s. A lot of people were getting very bearish at lows, and we got a very decent pop here. So it's going to be very interesting. We're hovering around this 50 back zone. I think, unless we get a daily close back above the 1100, it's still going to be pressure on. But it looks like this is a very constructive move, right? We got a very decent reversal candle here in terms of the dailies, and it started to rotate quite nicely, right? And if you look at it on the weekly, the weekly candle again, very, very nice weekly close, very bullish close. It would have been a lot more bullish if it closed back above the 1100. But here, short term, we would say it looks like those 1100s are calling, and then we'd look at those as being the pivotal level, pivotal line for the rest of the week. So we'll have to see what happens into there. And a very similar action moving on, on silver. We move down into this key level, and again, I think as much as people getting very bearish, you've got to ask yourself, when you can't get any new sellers at lows and it's holding so heavy, it could do two things, right? If it can't go down, it could go sideways or it could go up. But here, especially the way it reversed in this move is pointing to, the fact that we may have put in a decent bottom here, and there's no reason why we couldn't see this rally right back into the 16s, right? If you look at it from a weekly, the weekly was very positive. So we'll have to see how everything's very, very choppy, but I think it's safe to say that as long as we don't press new lows, market will probably try and move back towards into those 16s, especially if new lows don't print. That's where we'd expect price to go. Looking at cable, very nice action around these pivotal levels right here. No big change in terms of outlook. We're still looking at these 50-80s as the bull bear line for the week, right? Daily closes above bullish, and we've been looking for a move back into the 52-50s pretty much. Daily closes below bearish, and we'd be looking for a move back into the 48s, 50s, 48, 60s. So those are going to be the bull bear lines. Like, keep in mind, if we get aggressive moves back above these 52-40s, the next level to the upside is going to be coming in at the 155 mark. But don't forget that we do have an awful lot of resistance will be coming up, because you'll have these two moving averages coming up there. So that should see a lot of sellers coming into here. But my main focus would be right here on this pivotal level where we're pretty much going to open. That's really going to be the bull bear line for the week. Keep an eye on that. EJ, very aggressive move. I just wanted to actually, let me just do this again so we can get rid of that. You see here this move back up. It's coming into an awful lot of resistance here, right? You've got, this is a daily, you've got the 50, the 100, the 200, everything is lining up here. So this is going to be a very, very important level going into the week, right? If we start to get daily closes back above, then, chances are this is going to continue to squeeze off this level to go much, much higher, right? Now, taking these moving averages off the chart, you see that basically also we've got confluence with. So I'd be cautious here. We might get some probes to the upside, but this is a very, very big level. I'd say to the downside, you've got to focus mid-channel, upside, the upper side of this channel. Now, what's interesting is even if you look at it a different way, if you look at this move off those, and we'll look at this move on Euro too, right? How you see how you get confluence, right? You don't have to have the channel, but if you just look at that move off those lows, you see that the 50 back is coming in right at that level. So whether you have the channel or not, that is a key point, right? That's going to be a key point for the bull bear line. And if you start putting in some moving averages, right, and let's just as we said, you've got that 200, that one, they're all coming into the upside. So I think here it's fair enough to say that these two, the two circles here we've got up on the chart, these two areas are really going to represent where the fight is going to be on, right? And what we would say is bullish, very bullish on a break back above this zone, very bearish on a break back below that zone, and an awful lot of choppy action inside this area. So again, it's an interesting zone, but a very interesting zone, and it's similar to Euro. We'll look at Euro in a second. By the way, actually on EJ, if you go back and look at something like the daily chart or something, you see this is a key level, because this is also last time we bottomed here, we caught a lot, it's right coming in right there. So there's a lot of confluence around this zone, but interesting level overall. What else we got? Trying to do quite a few pairs today. Kiwi, again, we're very bullish. This is one of our bullish plays. We're looking for action above around this 65.00 for the bull bear line, and we said above that the 68s would attract. So far so good. Going into the week, the chart is on the blog. You can look at it. Just look at these 68s as the bull bear line, right? That's going to be the bull bear line for the week. Clearly, you'll see sellers trying to protect this whole resistance area, but we start to break above there, then we'd expect 71s, 50s, 71.70s to come into play. If we get sold off hard in the beginning of the week, then look for a possible move all the way back down into the 65s. But if anything, we'd expect there's still some more upside to go here. Nice little action. And again, our favorite squeeze chart, we talked about this for a long time, even though structurally our favorite chart, and the chart we've been playing for the short side for quite some time, is the Euro GBP, and we said it was time to try and look for an upside. We felt the positioning was really skewed way too short, everybody and their grandma. We said if there's anything that will likely squeeze, we expect this to be a nice little squeeze. So we had a nice little move off those lows here. Now keep in mind, if you look at it on the weekly or on the monthly, it's still very heavy, right? This is pretty much, the midpoint, right? So we'll have to see what happens. But again, I wouldn't be surprised to see this back into the lows, back into the highs. But keep in mind that structurally this remains quite bearish. If we can break those highs we put in last week, we'd expect to move back towards the 74, 75s. Could be very decent action. But again, we got a very nice action here. You could see also how many times last week at this past weeks we had opportunities to get long. Very nice chart. Very nice chart. Aussie and other ones, we're looking for this. We talked about this for a long time. We had this bull bear line. We're looking for this rotation higher to come. We're looking for 74s to print. We're still looking for 74s to print. It looks like it's stalling a little bit. We'll have to see how we trade early in the week, right? Clearly, if we can't take out last week's highs quick, then we would expect this to try and come back somewhere, confluence of these moving averages trying to turn up. This would coming back here. If we could take out last week's highs quick, we'd expect that 200 to come into play and the market try to test those 74, 60, 75s. If anything, this is probably a zone where we'll find some decent resistance, some sellers coming in. Again, there's a lot of stuff out of China, a lot of stuff out of Australia, out of New Zealand this week. It should be an interesting week for this pair too. USD JPY, not an awful lot has changed. Our outlook has remained the same. If we can't take out these highs, we still expect 122s to come into play, right? Not a lot to talk about there. USD CHF, we got let me just tidy up this chart. We had very nice move off the failure to hold above these 103s, 103 mark, very nice. And you got a lot of failures here that just came back down heavy like everything else. We're talking about the confluence of this previous high coming in here, right? The 50 back of this move, that's the first confluence point. Some people will be trying to use other fibs, but that's decent enough here, and I'll look at that as a bull bear line. To the upside, you'll get those moving averages reacting, but this is going to be a very interesting zone going into the week for a little pop or a continued drop. If you go and you put in the two moving averages, so the 100 and the 200, you see those are coming down a bit further down. So if it starts to move aggressively, we'd expect those to attract, right? Crude, nice basic action here. A lot of wheeling and dealing on this OPEC. We warned about this on Twitter too. Fairly simple here. 40 bull bear line, pivotal level, Momo line for the week, right? Look at daily closes above and below. Daily close below, we expect those lows to come into play. We expect the market to try and take a stab at those lows. If we get daily closes above the 40, then we would not be surprised to see a very aggressive spike back into the 45s. Fairly classic, fairly basic chart. That's in line with CAD. Probably faith is very much tied to crude, right? If crude takes a stab at those 37s or those lows, you'd probably expect CAD to take an aggressive stab at the 135s, break high, try and get as much positive MOMO as it can. If crude bounces, then we would expect this to come back into 32s. 132, 130. I like these moving averages here to guide, just to have a simple chart. We're hovering at resistance. In terms of asymmetric risk reward, I think clearly the short side is more interesting, but it's clearly under pressure. So we'll have to see what happens here, and eyes on crude, but those are the key levels we're focused on. Euro, what's going on Euro? Well, I think here, similar to that Euro JPY, right? We've come back down. We had an aggressive squeeze, as we said. I think we discussed on Sunday. We said what could happen out of Draghi, and we felt that the odds in terms of even possible outcomes from the meeting were extremely stacked up to everything's priced in and squeezed. So we read that pretty well. Nice little move. So right here, whether you're looking at these previous lows before the final kind of pukes and the attempt to rotate back higher as a bull bear line going into the week. If you look at the daily and you see that's pretty much coming in line with those two moving averages, that I think is the key area to keep an eye out for to the upside, right? Nothing as much has changed, so we're still in this broader, huge range. But clearly, when we're at lows, the odds favor the upside. Here, clearly, it's not the place to get aggressively long, even though we expect we could get some more upside. I think that if the shorts, and they'll probably be trying to keep a lid on this, but if the shorts can keep on emerging and adding pressure at this previous support that should act as resistance, that is coming in line with these two moving averages, the 100, the 200, which is also coming in line, broadly speaking, pretty much to the pip with a 50 back of the move from highs to lows. You see how much confluence we've got around this area, right? So basically, if the market can keep it below this area from a daily close perspective, then I think clearly the shorts still have a chance of trying to whack it down. If it presses above here and closes above here quickly, then I would not be surprised to see this squeeze aggressively. So I think short term, probably the 110.90, so you want to call it pretty much these 111s will be attracting, right? 111 is probably going to be attracting, and what we'll have to see is into the week is can it hold above or below. If it holds above, then I would not be surprised to see this squeeze back into the 113s. But this is probably going to be a selling point, where the market will try and hit it back down, back into 106s, 107s. An area to look at there on any sell-off, similar as we said to on the Euro JPY, is to look at the 50 back of the move from lows to highs. So that's coming in pretty much at 107.40s. So what I'd be looking at here going into the week is, on any press higher, 111s, right? That's also the multi-confluence zone. Back down, looking at the 107.40s, 107.50s, and then to the upside, looking at those 113s. That's pretty much the kind of area I'd be focused on. I'd be looking at. So you've got pretty much 113, 111, and 107. 50s kind of area, right? Something to look for. But I think the chart's fairly clear, right? Well, of course, that doesn't mean the trading is going to be easy, but the chart is fairly clear, okay? So I tried to go through as many pairs as possible, guys. As always, I really appreciate you guys listening. I hope to see you around on Twitter. If I've missed anything, just hit me up on Twitter. I can try and post some other charts. And as usual, if you like the content, the best way of saying thanks is just to, share it or retweet, whatever. Don't be shy. And I'll see you around. Have a great rest of the weekend. Take care. Bye-bye.